I was going to tell everybody at the beginning, come and go as you please. I don't care. It's not going to be like formal. Like, wait, where did he go? Yeah.
No, it'd be absolutely fun if we were like a huge
Wait,
group.
where did he go? Yeah, we'll see. I mean, there's 12 people waiting on YouTube. I don't know if that's an insight. There's 12 people waiting on YouTube.
Oh, that's cool.
Insight.
That's cool. I've actually always wanted to read this book, and that gave me the impetus to do it. So,
did you get through it?
oh yeah,
Nice.
Talib's kind of hard to read sometimes when he gets deep, but like Black Swan was a challenge.
Yeah, I find his books, I have to listen to it, the audiobook version. It's like if I try to read it, I get to the end of a page and I don't remember what I just read. Like there's so much information so densely presented.
One of the tricks I use is I'll get the audio book and then go check the book out in the library. And that way I can read along while I hear it.
There you go.
How's New York treating you?
Oh, it's good, man. You know, it's interesting. It's like the way I describe New York to people is like this is a city designed for two specific types of people. Young people who are full of like energy and excitement and just want to experience all the world has to offer, and like older people who are rich. That's it. If you're in the middle anywhere in there, if you're older and have less energy but you don't have money, it's a bizarre city, man.
Sounds like ancient Rome.
Yeah, exactly.
I'm listening to a podcast by a guy who did the history of Rome, and he did it in like 250 different podcasts, all of them about 20 minutes long, a few longer ones, but he does a really good job of making the history of Rome very personable.
That's cool. What's the name of it?
It's on the iPhone.
That doesn't help me. They're all on the iPhone.
They're all on the iPhone. Tab. Yeah, it's just called The History of Rome.
Oh, cool.
And I'll get into the identification. Just go to the main page. Library. There you go. Library. History of Rome by Mike Duncan, Duncan. He got into it so deep that he actually, this is all pre-COVID, and he got into it so deep that he and his wife actually started touring in Italy with people that had listened to the podcast, and it became a pretty major part of his business, taking people on tours all around. Well, this is where we talked, and remember in episode 88, this is where Trajan built this structure, and you can see it's still standing.
Yeah, it seems like such an obvious choice. Like, once you write the book, why not do the tour?
Yeah. Well, he's actually putting a book together. He got somebody to give him a book deal, but he doesn't know how he's going to put it together. I don't know if it's out yet or not.
Oh, sorry, the podcast.
Yeah, it's a podcast. But he got a book deal. Somebody came up and said, you need to do this in writing. So, cool.
Yeah, it always fascinates me when anyone is obsessed enough with any subject matter to dive that deeply into it. Like, I love movies. I'm a big movie guy. But, like, I couldn't do a podcast on movies. Like, I would run out of things to talk about at some point. I couldn't do, like, a 100 episode long series.
We actually I'm in Reno, Nevada, and we actually had a professor at our university that used to do a cinematography class. And everybody thought it was going to be an easy A, and it turned in, for the 35 years he taught it turned into one of the most brutal courses anybody ever took. He had zero tolerance for absenteeism. He actually went to the hospital one time because a girl had to have an emergency appendectomy and told her she was dropped from the course.
Well, that's
amazing.
That's one way to do it.
Wow.
But he would get 250 people in the class, and he'd get these. He had all the connections with Hollywood, and so he would get these limited run films, old films, new films, current films, and every semester was a different theme. So you could take you could take it 8 times during your 4 years and have a different experience every time. So like one semester would be war films, another semester would be all animation, another semester it would be love stories, another semester it would be teen angst. And people just fought to get into his courses, and there was always a group that hated it, but there was always this huge cadre of people that picked up 3 credits and had the time of their life.
That sounds better than my film school. It was not that
it was
detailed.
pretty cool.
Yeah, my film school was more technical. We didn't do much like theory study. We did a lot of like hands-on filmmaking, but yeah, it's interesting. All right, well, we've got 6 people here. We're still waiting on Scott.
Oh, I'm here.
Oh, you're here? Oh, you just didn't sign in by your name? Oh, you're Jess is Scott?
Wait, what?
Yeah, you're in as Jess in your thing, but that's cool.
Wait, hold on a second. What is going on?
That can be really
Oh, my
dangerous, by the way.
computer.
We'll just call you Jess.
Probably
Yes,
logged in
yes.
your wife's sign on.
Don't worry about it, man. Who cares?
Yeah.
Okay, so basically the way I thought we would do this is I'm just going to quickly, mention a couple things from the book that I wanted to point out. Then I'm going to hand it over to Scott. Scott's going to do like a little presentation. He'll talk about, did you want to share your screen or are you just talking?
No, I'll just talk.
Okay. So he'll kind of get the conversation started, kind of start bringing up some ideas that he found interesting. And then we'll just kind of turn it into like an open table conversation. Anyone can say whatever you want. You're free to come and go as you please. Don't feel bad. If you're watching on YouTube, you can type stuff into the comments there and I will bring it up in the video stream and we'll just start to chat, I guess was the way we do it. Does that make sense, everyone?
Yes.
Yep.
Yeah,
Sanju's someone on YouTube's looking for the Zoom link. I don't know if you want to post that in there or.
Ooh, yeah.
Check your email. Never mind. Someone said check your email.
Yeah, it's in his
I'm
email.
your assistant now.
No, it's good. If I can find the share button here, I'll send a link right now.
It said check your emails. Yeah, he's got it.
Okay, cool. All right. Well, let me so first off, there were 2 things. Obviously this book is full of like tons of great insights, but 2 of the main takeaways that I wanted. If you're new to trading, if you haven't yet discovered a profitable system, one great thing about this book, like pretty much every single book about a professional trader who's made a living trading, is that it's a perfect understanding of how you have to develop a system that is custom engineered to you, right? He talks about a couple of different types of traders and the way that they, created systems. But his system, the way he looks at markets, is so completely unique to his way of looking at the world and his way of perceiving things. He can't help but recognize that the universe is random and that we are fooled by our human psychology to try to make sense of the randomness. But in reality, it is just random. Life is just random and your brain is trying to make sense of it, even though it isn't real. So because that is his base view of the world, trying to come up with a trading strategy where he would, what's up, Sanju? Where he would, implement some sort of pattern recognition and assumption based on, previous history, this is going to happen or whatever, he would never be able to be profitable that way. His brain just couldn't comprehend markets from that perspective. But that is how I trade, right? I trade purely based off of, watching something has happened in the past a certain number of times. And so in my mind, I see that as increasing the odds it's going to happen in the future. And I like using that to give me the idea of getting in the trade and then just looking for the best entry risk reward wise. For me, that system works. That would never work for him. He couldn't trade the way I trade. And I could never trade the way that he trades. I just wanted to read this one paragraph. Okay, so he says, The best description of my lifelong business in the market is skewed bets. That is, I try to benefit from rare events. Events that do not tend to repeat themselves frequently, but accordingly present a large payoff when they occur. I try to make money infrequently as possible, simply because I believe that rare events are not fairly valued. That idea is insane to me. The idea that you would take 50 bets in a row and have them all be losers, and you just keep going. You just put another 50 bets in and another 50, and you just keep having like loser after loser after loser. But then when you have the one winner, it is such a big, massive win because the risk to reward was so good that you end up paying for all the losers and having profits. So anyway, that conceptual idea is really important to understand. When you're developing a system, you have to develop a system that is right for you, that is engineered for your way of seeing the world and interacting with it. Okay, the second thing, if you are a profitable trader, there is something that I have noticed in my coaching. There are a lot of coaching calls that I have had. I've had at least 10 of them where a person has a shockingly similar story to all the others. And it is basically this. They started trading 20 years ago, or they started trading 10 years ago, or whatever the case may be. They had a profitable system. And for years, they were just like pulling money from the market every day consistently. Maybe it was like an options trading strategy where like they always roll over these into those and this into that, and they can consistently get, a 2% a month return or whatever the case may be, right? And they'll be doing this for years, and they'll be making money and everything will be great. And then something will change. The markets will change, something will change, and their system will stop working. And then they're lost and they don't know what to do, and they can't figure out how to get back to profitability. I have had a shocking number of phone calls with people that this happens to. Like people who were professional traders for 4, 5, 6 years making a living, and then there's some change in the market, 2000 and, the year 2000, 2008, COVID, like there is some change in the market and they can't make money anymore. And the thing that really stands out about this book, and the important lesson that I hope everybody who is profitable right now, everybody who has a strategy that's working for them, to keep in mind, the scariest thing is all these stories that I hear, they always have the same thing in common. And he talks about it in this book. It is not just that when the market changes, their system stops making money. It is that they lose a majority or all of what they made very, very quickly. So they might slowly be bringing in income for 4 years, 5 years, and then something happens, and in like 2 months, they give it all back. They give back everything they've done in the last 2 years, 3 years, all of it instantly. And the reason is because they, first off, don't protect themselves. They are convinced that they're not winning money because they're lucky. They're not winning because they happen to have found a strategy that works for this moment in this market. They think that they just fool themselves into believing. Actually, there was a quote I wanted to read. Hold on. Well, now I can't find it. Anyway, the idea is just that our brain has the ability to trick us into thinking once we're winning, we'll always win. And so they don't protect themselves from losses. And the second thing is when their strategy stops working, they don't believe it. They fool themselves into thinking it's going to work again. I just got to keep going. And they just keep losing and losing and losing. So those were the two main takeaways I wanted you guys to have. So without further ado, I shall hand the mic over to Scott and we will start the roundtable conversation. The floor is yours.
Right. Thank you so much, Charles. Can you hear me all right? Okay, cool. So basically, I wanted to kind of just, there was like 5 or 6 main principles I felt like that he kind of touched on, and he danced in different like depths with each one. But I figured it would be good just to kind of like maybe just spark conversation, chat a little bit, and then continue on, because each one I feel like will send us down a rabbit hole. But his 5, 5 or 6 main concepts that I took away were, one, some unique, I guess, probability methods you could use to kind of test or, check your understanding of probabilities and your strategy if it actually aligns with the randomness in the market. Or, basically I kind of like think it would be good to make a checklist from his book to almost say, like, am I not doing all these terrible things that, okay, good, I'm not doing this. I have no survivorship bias. So I'll basically kind of walk through the main issues that us as humans deal with when it comes to randomness. I think the first issue that he touched on probably the most, and what we all kind of deal with and can relate to the most, would be the survivorship bias. I think, we all kind of understand the extreme Russian roulette analogy that he uses, or metaphor, where it's basically, if I gave you $1 million to play Russian roulette with this gun and you win 3 times because you blinked twice before you pulled the trigger, and you told everyone, hey, I won $3 million, like, you'd be a fool. Just make sure you blink twice. And that's what I did, at least. And I won, $3 million. Everyone's gonna be like, oh, wow, let me go ahead and do that. And so you end up with a bunch of dead traders. But everyone bases their understanding off of the person who survived 3 rounds, not, the multiple traders who blew up or ended their career prior that you never heard about. So because we don't see the failures, we assume that the success must be valid. So I think that was something he touched on a lot. And then, Charles, I think you touched on kind of like looking at the different, derivative products, like options, stuff like that, along with, it's just stocks, and understanding the way that it could be skewed, or I heard someone call it I wrote it down, but like the skewness bias, I guess, where he wants to make all his money off of a black swan event, or he hedges in a way where if that big one event happens, he makes tons of money, enough money that losing 99 out of 100 times is totally fine. And so often traders fall victim to seeing repetitive wins, or basically just not understanding how to arbitrage at the market. I feel like how to assess if your risk is worth what you're kind of doing, and if your payout will actually be what you're looking for. I had something written down here that was basically so it was something along the lines of understanding your, oh, here we go. So basically, we don't confuse probability and expectancy. So like, we want to maximize profit expectancy, not our profit probability, which is kind of like, at the end of the day, are you the most profitable versus like a couple feel good wins, but it doesn't really put you in the place you need to be the most successful trader for your strategy. And it's really understanding and looking and saying, hey, honestly, it's kind of almost like addicted to dopamine. Hey, I'm 80%, winning trades. I was there when I started. I know that, but they were 325 on the ES micro contract, and like $15. And then there would be a $300 loss. And I'd be like, well, I won 19 trades out of, 20, but I'm down $130 today. And then you add the fees and you're like, why did I sit in front of my screen for 6 hours? So it's really understanding, how do you maximize the profit expectancy and go all in on securing your strategy around that, making sure your risk is sound around that, which leads to kind of a good segue into protecting yourself from a black swan event, which obviously he came out with another book. I think it's called The Black Swan. But basically it's that problem that because you've only ever seen white swans, there can't be a black swan, because the NASDAQ has not gone X amount percentage drop in 50,000 days that it can't do it tomorrow. So, and that kind of comes into all kinds of ways to protect yourself, but it really comes down to assessing all your trades, and are you actually protecting yourself from blowing up, from never being able to trade again, from losing, as you get bigger, losing other people's money who may have invested in you or gave it to you to invest? How do you protect yourself so every day you wake up, you can continue doing what you're trying to be successful at, which is trading? So, I'm sure we can kind of dig into how much is too much, but, according to the author, absolute protection is the only thing that can be done. And then, basically there was I kind of sum it up.
Hold on, can I just pause you there for a second? So basically what he's talking about, okay, when he's talking about the expectancy, this is an important concept that a lot of newer traders don't understand, is you feel like what you want to do is win as much as possible. You want to have the trade be profitable and fill in the profits as much as possible. But that's not actually how you make the most money. It's not about the number of times the trade wins. It's about how much money you win in the end. So if you take 10 trades and 9 of them are losers, but you only lose 1 point in all 9, and then you have one winner that's a 20-point winner, well, you won 11 points. And that's a concept that a lot of traders can't quite wrap their mind around. And so the distraction in their own mind of losing, right? They get in a trade, it goes against them, they get stopped out, and then they get angry and they get upset. And those emotions cloud their judgment and their ability to think clearly and assess what's the best next trade. So if you can learn to think in probabilities, to stop feeling like I want to win, like who cares about the feeling of winning? What is the best return that you can get from your strategy? That's the goal. You become a lot more comfortable with losing. So anyway, okay, go on.
Yeah, one, I think a great real world example is one of our favorite trades, which is the cessation trade, right? Which is where it's a trend day, it's trending up or down, doesn't matter. And it's within a point of being no more a trend. It's going to be 2 ticks, let's say, on the ES past, it's now rotational market. That is a trade that won't work out a lot of days in a row. But when it does work out and the trend continues, not only are you in a great entry, but you could make 30, 40 points. Yes, you lost 1.5 point of risk 7 times in a row, but now you made quadruple what you lost. You have to be able to suck up your ego, take a red trade, knowing that, kind of like the dentist at the beginning of the book. If you look at your portfolio every 60 seconds, you'll have X percentage, and it'll be a higher percentage that you probably have a loss or you're in the red. If you look every hour, higher chance. If you look twice a year, you're probably going to be, if you have a successful strategy, much happier with the results you're seeing. And so it's kind of like step back, look at the bigger scope of things than just focusing on, I had 3 red trades, but that's the strategy. Lose, 3x what you lost. So I think that's a real life example that anyone watching your stream would be able to kind of relate to. So, I guess to kind of just sum it up, because you can kind of dive so deep into all of these, is basically, overestimating accuracy. You don't want to do that. He also says you don't want to get married to positions. He made the statement, traders often divorce their spouse before their positions. So a lot of the people blowing up, like you said, Charles, they got away with adding to losers a few times, but then they started going more leverage, and they just kept adding and adding. And in 7 days, lost 600 million when they made 250 million over 3 years. that's somebody who's not going to trade again. But they were in disbelief, and they were married to the fact that it'll always come back. Just like our COVID traders. Buy the dip. What's going on? We're below June lows. Oh, so I think that's a really, you got to get in tune with yourself and understand that it's just one trade. Let it go. And then a lot of us will rationalize the loss after or change the story. So, I was almost there. If I just clicked sell right at the daily high, it would have been a great trade. And then I actually would have been positive for today. So, actually it was a good day. And you don't learn from, you basically rationalize, and it makes us cope better with poor strategies or attribute, certain incorrect, thoughts to trading ideas that are actually inaccurate and will eventually cost us big.
Yeah. He talks about that brilliantly in the book, and it's something you can apply into your own trading when you're doing your homework at the end of the day and breaking down your trades. Is don't judge the trade in hindsight. Don't look at the trade after the market failed to break out and pulled back in and say, why didn't I short it? Put yourself in the context of the way you were thinking in that moment. The information you had in that moment, was it a good decision? Was it not? That's all that matters. That's a really good way to give you clarity as well.
Yeah. And
can I ask you about that for a sec?
Yeah.
Because that's kind of what isn't the whole point of journaling, reassessing what you did all day or what, kind of trade you did. Sounds like more real-time journaling is the way to do it. Like, oh, I just effed that one up, and here's why.
Yeah, for myself, I found I'm pretty good about remembering when I go back and look at the end of the day. I can kind of remind myself, what was I thinking? What was I feeling? Because I can't do it in real time. Then it's like a distraction. Then I'm like sitting there writing a paragraph, explaining what I'm thinking and what I'm feeling. I'm like, oh, fuck, I missed the trade. So but I always do it at the end of the day when I look back. But yeah, I mean, the thing most people don't do when they journal is they don't write down what's going on in their head. All they write down is like the setup, like, I sold to fill the single prints or whatever. They just write the reason they got in the trade. But what's really important is psychologically what was going on. What were you thinking? What were you feeling? Did you feel confident or did you not? Were you like looking for that trade ahead of time, or did it just suddenly pop in your head? That's where the insight comes in. But anyway, go ahead.
Well, yeah, I think the insight, and also if you don't have a trading plan or an idea of what you're doing, and you're just kind of, this looks right, here we go. It's one of those infamous double bottoms. Like, I'm going to enter here. Oh man, I was wrong. It's just a downtrend. So it's kind of understanding that. And then, lastly, denial, just blaming things on randomness when you fail, and then taking the credit or success when you are correct. And so many of us, build these, can have a good run. You know what I mean? Like, I think for me, like I had like 29 trades in a row when I first started that were really good. And that led me to hold on to a real bad loser and lose about 70% of what I made. So it was the fact that every time I did something, I always got away with it. And like, it was just random luck that I added to a loser and it went back and I was able to break even or XYZ. So I think just understanding that you're correct because of randomness and wrong because of randomness. And the best thing you can do is try to understand where there is no randomness, and improve that part of your strategy, and then accept and hedge for what you can't avoid, which is everyday randomness in life, in the market, in your own, sometimes the way that your mind takes shortcuts or heuristics, like sometimes you just have the wrong bias, unluckily, where someone else had seen the same thing, they would have never done it. So, it's just random that that's what you developed as a trader particular to you. So I just think it's, at the end of the day, understanding it's really damn hard, and you've got to look broader than just your little microscope, or look to others for what they've done, because most likely they're lucky as hell. So I think it was a really great book. I'll give him a pass on the little narcissistic at times, possibly, but
Oh, a little.
yeah. There's only 99% normal people in the world, and 1%, it's like his way or the highway almost. But I thought it was really good, and I think there's so much we could dive into. I think survivorship bias is one that, like, so many suffer from, because you just never do the research, or you see that investor on CNBC saying, hey, like, you got to buy the dip. Like, the number of YouTube videos that I disliked from CNBC because they were telling people we're going to new all-time highs a month ago. I was like, what? Where are you seeing this from? Or back in. So it's like, that's probably worked for the last 8 years, but it may not work in the current environment. And it's like, people just see that and just say, well, they're on CNBC and they're telling me to do this, and they've been successful. Look at their fund. I'm just going to follow. So I think that's something that's really pertinent and kind of important to understand when developing a plan, I feel like.
Yeah, completely. I agree. So let's open it up. Does anybody else have stuff they want to bring in? What were things about the book that you found interesting?
Can you guys hear me?
Yeah, go for it.
Yeah.
Invictus.
Awesome. I don't know if you guys can see me. I apologize. I am driving, so that's not the wisest thing I'm doing. Let me pull over really quick so I can have an engaging conversation here.
Sure.
All right.
I hear the brake.
Yeah, no, it's just the brake, the emergency flashes, and everything. So yeah, it's not the smartest thing I'm doing, but hey, great book. Enjoy you guys' group. Phenomenal, Charles. Thank you for having me on. Biggest takeaway for me from the book, honestly, was arrogance. I think, when you get on a winning streak, we all go through it, through the Superman syndrome. And for me, that was the biggest, taker from that. I've suffered from that as well many times, where, you just get into a good winning streak, and then next thing you know, one stupid mistake and you start revenge trading. That's one of my my problems that I've always tackling. But overall, the book was phenomenal. I thought it was great. Kind of caveat after what you said earlier when you opened it up, Charles, in regards to the market changing. I always look at old Jim Dalton videos from 2016, 2017 that he has on his YouTube channel, just to try to learn from. But I look at the market when S&P was at 2000. I'm sitting there looking at, a 10-point move or 20-point move was phenomenal day for that. And I'm thinking in the context of what we got going on right now. And we see that in a manner of, a minute, 60 seconds, that particular move. And I'm like, how do we adjust to that market going back, in 2015 levels or 2008 levels, if we're ever going to go back to those levels, and how do we develop as a trader or develop our plan for that kind of environment? So that's something that I'm kind of looking forward to, and trying to adjust my trading style for those small moves that we can experience.
Sure. Does anybody have any tips for Invictus for battling his revenge trading?
Put a rubber band around your hand, and every time you think you're revenge trading, snap it.
That's not bad.
No, you just have to shake yourself. You have to shake yourself away from it and recognize the symptom, and then break. Just break. Get away.
Well, something that I've done, it's helped me out for last year. I limit myself to 4 trades daily. I don't exceed 4 trades, even if I'm on a good winning streak. If I have a bad trade, I have to literally walk away for 20 minutes. And that's something that's helped me out considerably to be profitable. I've been profitable for about 2 years now, consistently with no issues. Sometimes I still revert back to the revenge aspect. And when I have that, I just walk away. And something you kind of mentioned, Charles, in regards to a journal, it being difficult to write your feelings down and when you make it a trade. Something that I've done for the last 2 years, I've recorded all my trades. There's this program called Camtasia. I record everything that I have. And then after trading or on the weekends, I will go back and force myself to watch my good trades and my bad trades. And I write down like an after action review, things that I did right, things that I did wrong, and things to improve on it with a plan.
Okay, you
That
guys heard
sounds
it.
great.
You guys heard
That's-
it. He had a problem with revenge trading. He started journaling. He worked through it, and now he's profitable for 2 years. So now you all know it can be done. Start
That sounds
journaling.
really great. Congratulations, Invictus.
Yeah. What I'm
Thank you,
hearing
sir.
is your first trade is the most important trade because then you have 3 trades to revenge trade.
Absolutely. So that's well, the caveat is after 3 trades, if I have 3 consecutive losing trades per my rules, I stop trading for the day. That right there. And Ninja Trader has a wonderful program, safety feature. I don't know if you guys are familiar with, where you could put a drawdown limit. So from my example, my drawdown limit is 3,000. If I go over 3,000, it locks me out for the day. I can't trade anymore. And that's something that's really helped me as well to kind of minimize that risk and pretty much save myself for myself.
Yeah, I have the same rule. 2 losing trades in a row, I take a break. I stop trading. It's just like, it just stops that psychology. It stops your brain, all the hormones and chemicals and stuff that start to, pump through you when you get frustrated. If you can just cool off, walk away for 20 minutes, it's shocking what a difference it can make.
I wanted to talk about that survivorship bias a little bit because I had a different story that I heard that I think makes it a lot clearer. And it was in World War II, the B-17s were coming back from flying over Germany, and they were trying to figure out how to reinforce them. And so what they were doing is they send the engineers out onto the tarmac, and if the planes had come back, and they'd look at all the holes, and they'd see where they had the holes in the plane. They said, we need to reinforce here. We need to reinforce here. See all these holes. Until some bright guy looked at them and said, why are we looking at the planes that made it back?
That's true.
And so they
That's a
started
good one.
looking at reinforcing the planes in places where they couldn't fly when they had a hole in it. And that brought it real clear to me with the survivorship bias that he was explaining, is that so many times we see out on the internet just these guys clamoring and clamoring and clamoring about how their trading plans are so good. And then there's this, it got me to thinking is, there's got to be, if 90 or 89% of accounts under 25,000 go bankrupt within the first year, there's got to be, for everybody trying to sell a product out there, there's got to be 200 that went under.
Do you mean the 200 of the people selling the product?
Yeah, 200 products that went under, that got blown up. I know one guy that was, I worked with a while ago, that he was doing credit spreads, and they were selling, 1 standard deviation outside and doing it unprotected and just collecting pennies and pennies and pennies and pennies and pennies. And then I think the event that triggered it is that they were all heavily weighted, they were all heavily in. And the guy in Saigon or Taiwan or something like that pushed out that order that caused the flash crash in the NYC. He said the order went out. It was supposed to be something like sell 2,000 ES, and he screwed up and sold 2 million. And it caused the New York Stock Exchange to collapse within 30 seconds. And then they figured out what was going on, and the circuit breakers came in, and then they figured out, well, what the heck was this? And then it came right back, but it wiped everybody out. It wiped out this whole trading group of people. It was like 35 people got wiped out in one event.
Yeah. Well, it's the nature of markets. It's like, the way I explain markets to people is like, it's almost like a living thing. It's alive. It's changing. It's developing. It's adapting. The market cannot stay the same. It cannot function without ever adapting. It's against its nature. So any system that ever works is going to stop working sooner or later. That's, one reason why I've chose to put my eggs in the basket of like discretionary trading, so that I don't have a key principle that I always act exactly the same way. I'm fluid with the market. So that means sometimes I'm punished because sometimes I'm just not in the flow of the market that day. And then it's really freaking hard. But as long as I can get into the flow of the market, whatever is happening that day, I have a system for that thing. So yeah, I think it's one of those things. Again, so many traders just don't understand is there is no one magical way to trade the market. It's got to be adaptable and it's got to change, you know? Anyone else have any points they want to bring up? Anything at all, even not about the book, about trading in general?
Well, I got something on the, where was it? I got something basically on the kind of survivorship bias, but basically the random histories to me was interesting how he was going into probabilities of, you know, the histories playing out. And, you know, he really talked about the Monte Carlo simulation, stuff like that. He got deep into some of that stuff, but basically the interesting thing is just like when we are looking at someone's track record, you know, it can be completely built on luck, even if it's 20 years of track record. And they may not realize it's built on luck. So they're preaching like it's the golden ticket, you know what I mean, for everyone to listen to, that it is possible that sometimes people beat the odds. Like someone in New Jersey, he said, won the lottery twice. Like the odds of that happening are insane. And sometimes that person may be someone that's saying this system works for me. You got to try it. And if you don't do your due diligence and your back testing or your risk management correctly, it's that blind trust that just gets you screwed. Or there's so many traders who stream on YouTube and you go watch them and, you know, they're like, oh, I've been doing this for 2 years and I made $700,000. You're like, oh, these guys know what they're doing. And then the first 3 streams you watch, they lose 7,000 each stream. Well, this is the first time that's happened in a year, but it's like you were going by their track record and maybe they were just like, oh, volume node buy, you know, and it's worked. And so it's just, especially with new traders too, or people trying to find what can now work in this new regime or this new market. It's just, I feel like really important to know that when you're searching or optimizing your strategy with outside sources, to really do your homework on their credibility and the you know, probabilities of their strategy or the structure of their strategy. Is it really as safe and foolproof as they say? Because it sounds like almost nothing is, according to the book.
And the other thing I would add to that is personality, right? Like I followed tons of those gurus trying out everybody's different system. None of it worked for me. But then when I took a course with Jim Dalton, although the first course I took, I didn't really understand market profile at the end. I could tell that Jim Dalton and I were very, very similar. That the way we think, the way we look at markets and think about markets was very, very similar. And so just trusting that if his system worked for him, it could work for me. I put like so much more effort into it than I ever put into any of the previous, you know, things I was trying to learn. And I wonder if maybe I would have been successful at all of those if I would have put in the effort, if I'd have really trusted that it could work and kept at it instead of like trying it for 2 months and quitting because I didn't make money or whatever. So that's another thing I would say is like, make sure the personality of wherever you're getting the ideas from is similar to your own, you know?
Yeah, that's a great point. Is there anyone in the chat that does a strategy that loses much more, but ends up much more profitable?
You mean loses more frequently?
Yes, more frequently, yeah.
Looks like no one.
No, that's a hard strategy to maintain your mental equity.
Yeah, that's.
No, go ahead.
I was going to say that's one that generally you have to be a really experienced trader to get there, to get that confidence. But anyway, go on, RK.
No, I've been for months now. I've been studying this zigzag rotational thing, and to me, it makes so much sense. I have an inability to trust it, but every time I see it happening, I see, okay, that was so obvious. not so much in hindsight, but like right away. Like I just wouldn't have even risked much to just take that reversal because I see it went up 12 points, it went up 15, 25, whatever's beyond what normal, like normal rotations are what, 20, something like that. You can tell that that would have been a fairly low risk move, but it's the inability to take that trade. And it really could be a low risk, 2-point move. I have tried like on a small like MES, and yes, it fails often only because I put stops too tight, but inevitably it works in the long run, and then you can get this fairly long run usually. So for me, that's something I'm really working on, and I have to be willing to take more risks and more losses because I think you get the longer run. It's just something I've been observing. It's just taken like all the noise out of the market and just create straight lines of like anything beyond, I don't know, say 8 points. It just creates a straight line. It doesn't even register that or anything below that, So 6 or 8 lines, 6 or 8 points. You just get that straight line. You're willing to take that risk of going up and down to take the longer run. That's what I'm working on. And it would require taking more losses for sure. But like you said, smaller losses for the bigger run.
Yeah.
But
yeah,
it's that pushing the trigger.
Yeah, you got to either practice in a paper account or, like you said, just use like one MES every time until you get confident, until it's like you've seen it work out in the end enough that your brain trusts it, and then the confidence will come.
That's my problem. I'm like, I'm going for 2 ES on this one because I can always add 2 more if I need to, and that's way too big.
Yeah,
I know that.
Yeah. No, you got to managing your risk is managing your psychology. It's an important part of it. Anybody else?
I think that's a good point. For me, at least, what helps me and helped me was switching from 1 ES to the MES, because in the beginning, when I was really formulating what trades, now I know exactly what trades I'm going to take and how I'm going to take them and what my risk I'm willing to do based on, the market profile and what type of day we're having. But initially, I knew the probabilities, but I couldn't trust the probabilities in my gut. And like, that's a really powerful thing to fight. So what I did, because I refused to paper trade anymore, was I went down to the MES and I would go in with 2, 4, or 6 contracts based on the confidence. And I would sat down and said, okay, this risk level, I feel confident with 4, this with 2. And I would go in because I would always take the profit part way through when I was like, oh, this is going south. I would be able to break even, but take that profit along the way to my target. And eventually I ended up going back and looking at the numbers, and it was hitting the stinking target, and I was leaving so much money on the table. But I would have never stayed in those trades with larger size, and I was trying to size up, and I just couldn't do it, even though the numbers worked when I was doing 1 MES. So it should work when I'm doing 2, 4, 6. But it's just like sometimes the numbers are daunting, and you trust your strategy, but you got to make it work, even if it's not technically the most efficient way. If that's what helps get you to taking that 1 ES and letting it ride the whole time, you got to take those steps and find out what works for you. Because some people are just good. They're like, the math says go, and you just do it. For me, I'm like, I feel like I'm going to be wrong, or I need to feel it in my gut that I'm 100% right, because I don't have a big enough sample size. I only have 4 months of this or 3 months of this. And, I think that's a big thing too, is the sample size. So for me, it's just kind of do what you got to do to get yourself, whether it's limiting to 4 trades or limiting the size or being able to break up the size, even if it makes it a more efficient trade to get you to become a better trader down the road.
Mm-hmm. I agree. What about you, Chris? What do you know? Tell us something.
I know it all, man. My mom even said so.
Finally, that's what we're waiting for.
At what age?
Right. No, I used to scalp NQ a lot. So, in an old coach of mine, the way he taught me, or kind of embedded in my brain, is if I'm in the market for more than 30 seconds, anything can happen. So you got to scalp it for, 2 points or whatever. So, but it just, like, it was always 2 steps forward, 1.5 step backward. It just wasn't working out, and I needed to try something else. Which is when I came by you. I mean, one of the things which I mentioned yesterday, is I'll cut the trade short a lot rather than reaching my target, because it's what I have a hard time working past is sitting in a trade for 20 minutes. I mean, that was like, completely against everything that was, I was initially taught, and I believe, you take a kid and you teach him 1 + 1 = 3. He's always going to think it equals 3. And once you tell him, no, it actually equals 2, it's a hard habit to break,
Yeah, for sure.
So,
have you found any tricks for that yet? Or have you tried just like set it and forget it? Like, don't allow yourself to ever move a stop, or?
Yeah. I'll get up and leave.
No, I do that. I do that all the time, especially if I get in a trade and it's like not going anywhere. It's like, right, you get in and you're like, go, fucking go. And it's right, just like, it stays and it stays and it stays. And you start getting you're like, you're like, like, at this point, just stop me out to make it stop. Like, I will just straight up leave. I'll just get up. I'll go start doing dishes in my kitchen. I'll
yeah.
Every time, it is the best help you can have. If you're in the trade, your stop is set, your take profit is set, just literally stop looking. It's great.
Yeah, there's yeah, like I said, I mean, when it's one time framing, I never, you're the one that I've seen TPO charts and stuff like that, and I was never really looked at. I do combines with Top Step, and I've been on step 2 for like forever, and but that's the coach in there. He does all TPO stuff, and I always looked at it and it was all like great to me. But then when I came across you, and I'm like, all right, well, let me try something different here, and the way you explained it, made so much more sense. So now when I'm in a trade and it's one time framing, that I don't necessarily have too much. At first it was tough because, I mean, sometimes you're in the trade for
hours.
Right, exactly. And it's like, and then it'll do its pullback, and then I'll be like, I'll get real itchy with the trigger finger on the mouse to close the trade, because at any time it can just completely liquidate and dump, and waste an hour's worth of time. So
have you had one yet, though, that you sat in and let it go all day?
Oh yeah.
Isn't that was, you feel like a king?
I got into it late, but yeah, the longest I managed to stay in one was I don't know, it was like 2 weeks ago for like 35 points or something like that, which was huge for me. Like I said, I'm used to, and I'm used to not only scalping for a couple points here and there. It was also NQ, which is only $5 a point. So
but yeah.
So now, kind of where my struggles with it is when we're rotational. I just can't get it. It ain't working for me. So I'm getting to the point where as soon as, like I said, that's why F period is for F this trend, because a lot of times that's where cessation is. And I'm just like, after that, I'll either quit for the day, or, like I said, I go work. I work nights, so I'll take a nap or something and come back in, a couple hours later for the last hour or something. But when it's in rotation, what I would do is I would set it, my stop where I thought would be somewhat reasonable, but I just can't wait for it to go back to the POC. I just don't trust it when it's in rotation. And I've been very slowly getting a little custom, getting real picky with the trades, but
and you don't have to. You don't have to trade
but
rotation.
For the most part, I said I watch.
You can decide. I'm a trend guy. I'm an expert on trends.
Yeah.
When the market is trending, I know how to trade it. I know what to do, and I crush it. And when the market starts rotating, I go to lunch. Like there's nothing wrong with that.
Right.
That's fine. You know.
And I'm like RK. I work off a zigzag chart too. So especially when it's trending the way I have my charts and stuff set up, the fear staying in the trade for a long time, I kind of overcame real quick now that I see what's actually happening and I have the confidence, and it keeps me in there. But when it's in rotation, just forget it. I'll probably, it's my ratios are way off, put it that way.
Yeah, no, I understand. Rotation took me forever to grasp, and it's about, which is why I lecture you guys so hard on it all the time. It's about forcing myself not to question it. Like I don't fucking question it. I just know until it breaks out, and I have my rules for a breakout. It's got to get above, find support, bring in volume, blah, blah. I just know until I see those things, it's still rotational, and that lets me just stay in the trade. Because all I do is I say to myself, is it still rotational? Then stay in the trade, Charles. What the fuck are you thinking? Like, it's still doing what you thought it was going to do. Nothing's changed. And so I got there over time,
And sometimes the levels are so ridiculously obvious, you can't believe they're happening. Like, 3750, gee, what an obvious short that is. Or, we're going to hit all the levels from yesterday, the day before, Friday. It's like hard to believe it's so, I hate to say simple, but so obvious. And then, of course, the one time you do it, it's not. But but I think that's part of the problem. It's like, how could this be so routine or set in stone almost, that we're going to turn this around here, or whoever they are?
Yeah. Oh my God.
Everybody piles in.
As a swing trader, it drives me nuts. I can always tell what the market's going to do over the next couple of days or over the next week. Cannot fucking trade it. I've tried everything. It's like, I always know, like, we're breaking out. We're about to have like 3 days of excess. Why don't I just short it and just stay short for 3 days? I know it's coming, but then I'll be trying to go to bed at night and I'll be thinking about, I got to check on my trade and blah, blah, blah. It's so funny the way sometimes trading is very simple, but still hard. It drives you nuts.
So what I found interesting was he was dealing with the same issues, but inverse of me. For me, rotation was always my favorite because I'm a fade trader at heart. Like, I know this is the flip, right? So for rotation, I was so used to being stopped out on a incorrect fade that for me, it was like, this is way more accurate. Okay, perfect. But for trends, I could not trust them because my mind was always like, I see the momentum dying. The ticks got knocked down. It's going to flip and then it'll go down and then bounce right back up and go 30 points higher. And I'm like, oh my gosh, I got stopped out twice, And for me, I had to, that's the reason I implemented the 2 micros, because I had to teach and believe, hey, I think it's going to end here. I'm going to get out with, 2.5 points profit and then watch going for 28 points. I had to learn that, by kind of downsizing, because the rotation for me came natural. Like, this is great. I'm above the day's high with my stop. It's going to go back to the POC and, we'll go back and forth. And so for learning and becoming a trend guy, it took me weeks of hearing Charles be like, we're in trend, guys. Nice. It'll push farther than you think it will push. And I'm like, not farther than this. Oh, stopped out. So I feel your pain. And, it's at least for me, downsizing and taking half profits was what helped me kind of accept I was totally incorrect, because I was looking at real money saying, yeah, I left that on the table. Okay, shut up, Scott. Just listen to the numbers.
was going to say that, like Charles' voice of reason, the voice of God, thank God. I still don't always listen, but it's like, at least I hear it. You know, why are you shorting? It's one time framing. Like, you're right, but it's going to turn around at some point.
I had a talk with somebody the other day that was telling me they've been following me for a long time, for like a year. And they were like, Charles, I love you. I think you're amazing. You've taught me so much, but I learned that your stream is so much more valuable if I mute it. It's like, if I just don't listen to all the shit you're saying the whole time, and all I do is I look at what it says on the bottom, I look at the arrows, where is support and resistance, and I don't listen to you explaining why it's going to turn here and what could happen and da-da-da-da-da. And I was like, you know what? To each their own, however it helps you. I don't know.
That's wrong. In fact, I used to listen, and still do sometimes, to Brad, and he's the opposite, always trying to catch a knife, always trying to do the opposite, and shut him off completely because he fails every time. So you've grown so much in the 15 months I've been listening. It's incredible. I mean, you've mastered this chart. You've mastered everything and helping us. So,
well, thank you.
You've been a great asset for sure.
I appreciate this. Go on, finish your point.
No, that's good. There'll be more.
Yeah. So does anybody else, those of you that haven't said anything yet, Sanju, Electric, anybody got anything they want to input?
All right, I'll just say, just because you asked me to say something.
Uh-huh.
I didn't read the book, but I did get the drift of it. And, you know, the fact is that even if you've been a successful trader for many years, you could blow up your account. That message kind of scared the hell out of me. Because I don't know if 5 years from now I'm going to be blown up and everything that I made goes away. It's not too much, but you know, I put my account on this website that actually goes into TD Ameritrade and extracts out and gives you, you know, what you've made over the years. And I did it for the past 2 years, and the percent turns out to be 46% winners and 54% losers. But I don't know how they're doing it. Maybe they're calculating, if you do a broken wing butterfly, they're calculating the two as losers, even though the whole trade won. So maybe that's what's going on. But just looking at all the trades that I do in daily and monthly, it seems like I'm probably, and I, you know, this is just my guess, but I can look at it. I see most of the trades are winners, fortunately so far. But I follow, you know, I'm doing paper trading with you, Charles. But I also look at Resnick's service, the weekly. So between the two, that's all I'm doing. But I'm more comfortable doing the, you know, the ratio spreads and the broken wing butterfly. And just to get into futures, it's even though I've been listening to you since you were in, you know, 10 to 20 subscribers, that's when I joined you. And I've been listening to you, but I still can't get myself to start doing what, you know, start trading with ES. I've tried, I'm doing it with MES and paper trading, but that's where I stop.
Yeah, well, then there's nothing wrong with trading the Resnick style. You know what I mean? It's just, you just learn to take those like more swing trade sort of 3-day setups and trade it that way.
Yeah, but for some reason, I keep looking at my psychology and I keep thinking, you know, the way you explain it seems to be resonating. So I should be able to dive in a bit, but I just can't pull the trigger. I mean,
yeah, that's so interesting. I mean, it's just a matter of time. I feel like if it's connecting and it's making sense and you keep working at it, it'll click.
Yeah, because, you know, I'm actually, I have a daytime job, but it's a relaxed job. I'm a professor and I teach physics and calculus.
Very relaxed.
So, yeah. So, but it's like after you've been doing it for almost 20 years, you know, it's easy. But the thing is, I can follow the logic that you're laying out, and it makes so much sense.
But those emotions.
It's the gut. It makes it hard to follow.
Yeah.
And also, Sanju, to the idea of being afraid of blowing yourself up and all your success, the point of the book is that you can protect yourself from it by intentionally doing so. You know what I mean? Like, you can make decisions to protect yourself. Like, one example for me was like, so one time I'd had a really good week. I had pretty good returns. And then what happened was one day I entered a trade. It was like a short where I was targeting, like, you know, I put a limit buy order down here to take profits on my short, right? And I got in the trade. It started to move my direction. I moved my stop below my entry. The market came back up and it filled my stop, but it didn't get rid of that limit buy order that was down at the bottom. And I didn't realize it. And I just, like, that particular day, I was just like, I'm kind of done trading. I closed my brokerage account and I just walked away, and I had no idea. And I opened it up the next day and I had taken on a massive loss in the overnight because that order had filled and the market had gone against me, you know, like 150 points in the overnight. And I had no idea. And it was like, the concept freaked me out so much that I could have, like, lost everything. That what I totally changed before that. The way I used to do it is I kept all my profits in my day trading account, and I was just trying to, like, grow the account bigger and bigger. Now what I do is every couple of weeks or so, I take out my profits and I move it into a long-term investment account. So my day trading account is always the same size, and it helps me psychologically because I don't have to worry about sizing up. And it helps protect me from that feeling of, like, well, I took out my profits. Like, they're safe. They're gone. They're not in that. They can't be taken from me anymore. And that has a huge psychological effect. So
That's a good idea.
Then you put yourself in the position of, I got to earn this again, right? You don't see all these, you know, this money sitting there that you already made by doing the right things, because that was the past. Now you're in this new market, facing it again. You got to make the same amount of money back, and then you get to take it out of your account. Because, like you said, if you go off of, well, I did this, look at all this money I made by doing this, it must be right. You're just giving yourself another reason to, you know, maybe trust incorrect biases from the past and some of the stuff, you know, like he was talking about in the book. But I'm just curious if anyone else has any other, maybe not black swan events, but I certainly had a couple in the short time I've been trading since, like, the end of last year. That were pretty rough. I don't know if anyone had any stories they want to share of a lesson they learned the hard way, kind of like Charles.
go on, Invictus. We had you for a second.
Oh, I'm sorry. Like I said, let me pull over once again, but I'm also going through a terrible cell phone reception, so I apologize. Well,
Bro, are you on a road trip? We've been talking for like an hour.
Hey, I'm buying a vehicle, so I going on the road. Absolutely. So this takeaway, I think that I had where I started being profitable was the fact that I 0.5% of my 2%. 0.5%. So essentially, giving it up 1% where I had no trade. So that's what will be the full
It's entertaining anyway.
Yeah, what he said.
Sorry, Victus, just to cut you off, man. I'm sorry. Your phone is like glitching out. We can't really tell what you're saying. But thank you.
Sorry.
No, it's all good, man. Anyone else? Anybody have any scary stories? Any scary moments? Any lessons learned they want to share?
I got lots, but most of those will be for another day.
All right.
I keep you here for hours.
Well, I got one that I've got a couple, but one that involved stop losses and kind of like trading when you shouldn't be trading. So I have rules: no trading from bed, no trading in the car, no trading in no trading when you're in Starbucks line waiting for a coffee, 20 people, like just focus on what you're doing. You're not in the flow. You're not going to probably nail something that you should be. Now, I was in the shower. My phone went off with a notification from TradingView. Hey, this hit this level you wanted. I didn't look at my phone. So I had two-factor. I started by trading crypto. So this was on Binance. So I said, okay, I'm going to enter. And before I could because I didn't put my stop loss in when I entered the trade, I just put what I wanted to enter at the limit order. My phone died while I was in the shower, and then the order filled, I was pretty sure, in about 30 seconds. And I ran upstairs like as fast as possible because I got to put the stop in. I went in with pretty big size, ran upstairs. The computer said, we need your two-factor authentication, which
You need the
went
phone.
to my phone.
Oh, shit.
So I had to run to the bedroom and like charge it and just sit there for 10 minutes. I already was been 5 or 10 minutes. And then I got in. Meanwhile, I'm watching it on the computer and I can't get out of it. And it just was going down and down. And I was like, oh my gosh. And so I got in and it was well past my stop. And I gave it like 30 seconds. It bounced up a little and I exited, which honestly, I should just exited immediately, in hindsight, because I would get burned down the road by doing that again. But that was one instance where it literally felt like a black swan. Like I cannot get into my account. I do not have a stop loss and it's crypto. And we know that can just go, woo. So that was a perfect example of something I changed, which is I'm not entering unless I can put in the take profit and the stop as I enter, unless I'm sitting at like my PC and I know I have, and I've now known I need multiple ways to access that two-factor authentication, which I didn't even think about when I was trading. It wasn't a thought that affected my trading. It was just technology. So in the end, there was all the probabilities said you're 100% safe, Scott. You could put your stop in, but no, there was something that wasn't even like stock related or crypto related as far as price movement. It was just my technology failed. And it's crazy what you really need to think of to really make sure, are you safe from a black swan event?
Mm-hmm. Yeah. If you don't have a battery backup on your desktop, you got to get one. If you're like me, like I bought like a wireless mouse, I also bought one with a wire at the exact same time, just in case in the middle of a moment, the mouse stops working, the battery dies or something. Like you gotta have, that's the point of the book, is like, have a plan, have a backup in case the worst, weirdest, most unexpected thing could happen. And then you'll be fine when it does.
Hey, Charles, I don't want to put you on the spot, but per Sanjay, I have some of the same emotions. I don't trade the futures that much. I'm in it and I do MES stuff, dabble in it. But what part of this book do you think really you've taken to heart in generating your style of trading and your plans? Because I see a lot of stuff in this book in your style. I just like to hear what you think it is.
Yeah, it's hard for me to like nail specific things. And also I would tell you, I read the entire series. So this is like basically just setting you up for like another 3 books that come after it. And then it goes like much more into detail with all these subjects. And they're all so good. I mean, who knows? I mean, I'm sure eventually if book club keeps going, we'll get to them all at some time or another. But yeah, I mean, I would say with Nassim Taleb specifically thinking about my like day trading, it's really just about accepting the randomness. I think is so many traders, the thing that stops them from getting the clarity to be able to get into good trades is being frustrated that the market isn't doing what they think. And something about just accepting that the market is going to do whatever the fuck it wants. And all I can do is just be prepared to handle it as best as possible. You know what I mean? So for me, that's recognizing, is it a trend or is it a rotation, knowing which direction to trade, and then being like this, the edge is time. The edge is absolutely waiting for the best entry and then being disciplined and staying in it. So yeah, I can't think of like a specific thing from the books, but just the concept of understanding risk and understanding what you're really doing, you know?
Well, I read the chapter on protection and, all the stories he had about guys blowing up and not reappearing. And every single day you constantly are saying, just put your stop in, get your stop in, know where your stop is. And that to me, when I was reading that chapter, that's all I could think of is that, every day you say that stuff repeatedly, that you have to protect against the randomness because it can go into the toilet because something happened somewhere, because somebody has a mouse that doesn't work and it should have worked. And, all of a sudden 200 ES contracts go out the door.
Yep.
And, everybody, 50,000 traders across the United States are going, what the fuck? And that's the way it is. So you just have to go into it protecting yourself, know what your stop loss is, know what your loss on the trade can be before you even initiate the trade, and then wait for that trade to show up. That's the stuff I got out of the book that I see coming from you every single day.
Yeah, for sure. Yeah. Wait for the setup, trust the system, manage your risk. They're simple concepts. They're very, very simple. They're hard to do.
Mm-hmm.
Why 2% rule? Why not 1% or 4% max loss before you?
Well, it doesn't matter what the percentage is, right? It doesn't matter if you do 1% or 2% or even 4%. What matters is that it's the exact same every single trade, right? So if you're looking at your trades and you're figuring out, out of all the trades that I take, in a week, half of them are profitable and half of them are losers, right? If you guaranteeably make make 4% on all the winners, if you always make 4% and you only ever lose 2% on the losers, you can be right half the time and be massively profitable. You can be right 40% of the time. You can literally be wrong more than half the time and be profitable. But where it fucks you is if you don't get to 4% on your wins, right? If some setups you're risking 2% of your portfolio and then you have a winning trade, but you take profits early and you only gain 1% or 2%, that fucks up the whole math of what makes it work. So it doesn't really matter how much you want to risk. It just matters that you are always targeting at least double the reward. And if you can, right, if you can make it asymmetric, that's even better. If you can make 6x a reward for your risk or whatever, as long as you follow that simple rule, always, 2-to-1, reward to risk, and never risking more than 2% of your portfolio. And you only have to be right 40% of the time. That's the magic, as far as I can tell, is that like, it's just about following the rule and never breaking it. And then it works mathematically.
And that comes from the book also?
Not from this book. That's just like a common trading thing. Some traders hate that, by the way. Some traders will tell you the exact opposite. They'll say, if you're in a winning trade, you got to go all in and you got to just know when to hit the pedal. But for me, no, man. Consistent every day, same thing, bread and butter. That's me.
So what's interesting for me is, like you were saying, you could be 40% winners and still be profitable when you're 2-to-1 in. When I had first started, I ended up getting, funded with a, like a combine, prop firm. And I took some profit and went and started my own personal account where I got 100% of the profits. And the first 30 days, I was down 60% compared to my prop account. And I was like, what is going on? And what was happening was, because it was my profits and my money, I was cutting the trade short. I was already very disciplined at taking the loss when I hit my stop and not moving it. And in my prop account, I was just treating it like every day. Let it ride. If it did, it didn't. Whatever. At the end of the day, it's not my bank account. I can go withdraw. Well, I can, but like, you know, it was free money in essence versus like this hard-earned money that I'm gonna. So I was cutting my trades 50%, 40% short, and I had a 79.6% winning trade. But I was negative. And it was because, and I compared them side by side at the end of the month. Like, how could this be? I'm taking the same trades in both accounts. I was taking a lot of the same trades, and it just came down to the psychology of the whose money it was, or what type of account it was, and it's crazy how that messed me up. But Charles is 100% right that just cutting trades short and not following your plan, you could be profitable, or you can have a high winning percentage and be not profitable, which is a weird counterintuitive concept, I think, for a lot of people. If you were to tell someone, hey, you could be 79% winning trades, they'd be like, sign me up. What's your system? Losing money is the system in that scenario. So, and it comes full circle to journaling and understanding and evaluating at the end of the day, what is causing this outcome. And I think, you know, something that Charles does well too is like, he looks at, okay, that's weird. You know, I was wrong on this trade, you know, or I was wrong on my sense of the market, but then he won't change his thoughts. He'll sit there for 2.5 hours and assess till he's really short and then re-enter versus like, you know, and I'm sure at the end of the day, he goes back and he looks and says, okay, what happened on this trade? Why did I thought I was in the flow. I had these 2 good trades. What happened on this trade? And I think at the end of the day, you have to reinforce your results by always like checking the numbers and the process, not just looking at the bottom line or looking at your winning trade percentage, because it can be very deceiving and lead you down like some false like confidence.
Mm-hmm. And differentiate.
Yeah, when I was scalping, I mean, my win rate was 87%, but Ninja Trader was making more money than I was. That was extremely frustrating. And you know, it's you sit there and you take a bunch of trades, but you know, one trade wipes out an entire, you know, the past 10 trades. And it was, you know, and then I'm sitting there and I'm looking and I'll be up, you know, some money, which is, you know, all fine and dandy, but then I sit there and look at the brokerage fees and I'm like, all right, I got to figure something else out. This is just, dude, you know, this is ridiculous. So yeah, as far as the win, you know, whatever your win weight is, to me, it doesn't matter because the way I'm kind of been viewing it lately is it balances itself out. Well, you know, like Charles says, you could be 40% profitable. You know, it's just depending on how you go about it. Now, I would rather be 40%, have a 40% win rate and be profitable and all the money is mine and not Ninja Traders. You know what I mean? I don't know, the way I've been looking at it is it kind of has a way of evening itself out as far as the win rate goes. So I don't even look at that anymore. I can care less. I haven't checked it, and who knows how long, you know, I'll run, you know, like my weekly stats and stuff just to mainly just to check to see what my average win number is as far as dollars and what my average loss number is as far as dollars, just to make sure that, you know, my average trade winning trade is $100 and my average losing trade is $200. I'm, you know, getting that to flip the other way. So I don't even look at the win rate anymore. So.
Well, you should start paying attention to it because it will give you insights into how you should manage your risk. So like you should know, like how often trades work out and even different setups too. So like knowing a trend setup, like you said, you don't like rotation, knowing trend setups, I have a 70% win rate, rotation, I have a 40%. That can help you decide to trade with larger size on trend, smaller size on rotation. So it's worth considering. The more insights you can get into yourself, the better you can formulate a new plan.
That's kind of, yeah, I suppose I could see that. It's what I was, it was when I was at 87% and barely making any money. It was kind of like why I got it, because it was really frustrating. I'm sitting there thinking, oh, I'm an 80%, win rate trader and shit. And it was just kind of messing with my mind a little bit until, I kind of started focusing on what my average win was and what my average winning trade was and what my average losing trade was, and getting that to flip the other direction. So, because it's great if you have a 87% win rate, but if your average winning trade is $100 and your average losing trade is $1,000, you got a problem.
Yeah, I mean, you literally could have had a 13% win rate and been profitable. Right. If you lost money with 87, it's like, fuck, that's terrifying.
Right. Exactly. So,
but anyway, all right, guys, well, it's getting a bit late. Feels like a good time to wrap this up.
Well, I got one more question. If it's
go for it. Let's do it. And if anybody has one final thing, they can hit me with it. Go for it.
So in the book, a lot of the traders who blew up, they just didn't cut the losers. They weren't prepared to do anything but add to losers. And one way I trade, and I'm pretty sure you do sometimes too, Charles, is especially when the market's rotational, I will layer into a position. And I'm just curious, your take on the difference for people of adding to losers versus layering into a position. And if you could maybe shed some light or maybe clarify the difference between the two. I'm just curious because that's something I've been doing the last few months, and I'm just curious your take.
Yeah, I have a hard rule on that. I never add to losers, and I will only add to a trade that's going against me. Like you said, if it was intentionally decided ahead of time as a strategy to enter it. So if I decided I'm going to get in here, here, and here, then yes, technically it's going against me and I'm adding, but I will never get into a trade, it go against me, and then think to myself, well, now it's an even better deal. Let me add to, no. I have learned a hard rule. I do not do that. So I either enter the trade and it stops me out, or I get to my take profit. Like those are my choices, unless I planned to slowly get in.
Now, would you consider those multiple trades? Because the thing I'm curious about is,
no, I see it as one trade.
That's how I see it, as the average with my stop below, like let's say daily low or whatever. The 2 volume nodes that I want to add. I don't normally scale on 3. Sometimes I will, but I was just curious I've been kind of looking at one big trade preconceived, like there is no such thing if it's not in my setup as, scaling in. I have specific trades now, but I had to take some time to kind of make those trade setups and add them to my repertoire to officially count them as trades, because you have to calculate risk slightly different. You want
whatever your risk is, whatever you max allow yourself, you want that to be where you're at when the last one fills. That's the goal. Yes. But yeah, it's a tricky thing, man. You gotta understand the difference between adding to losers as part of a strategic plan and doing it because of your psychology. Yeah, it's but one thing to think about, just as a random thought, I always think of trades as trade ideas, right? So each trade is a setup. If it is a rotational trade, the setup is we are below the POC on rotation. Wherever I get in, whether I slowly get in or I get in all at once, the trade is to get me back to the POC before breaking the low, period. And that's one trade. I won't take on more than 2% of risk on that trade, however I enter.
Yeah. Now, do you ever calculate the, I haven't gone and I'm going to try it this month, but the opportunity loss as far as it doesn't reach your layer 2 and 3, so it only hits 1, and then how much did you miss out if you had entered on the earlier or first contract? I was just curious.
No, I've never gone that deep with it.
Oh, so something I was like thinking, was like, is this a good strategy as far as, you know, ROI versus just going heavier on the first position? You know,
it tends to, for me personally, it's more of just a confidence thing. If I'm absolutely certain that the market is rotational, I'm going to wait and get in with my full size, you know, at the most riskiest location, like as close to the lower high as I can. But if I'm a little less confident, I'll just kind of get in a little bit here, a little bit there, you know, hope it gets back to the POC. But I've never done the math. No. Anyone else? Any other questions for me before we go?
One question. Isn't it also true that the 2% rule works if you have a larger account size? It works more in your favor than if you have a smaller account size.
Only if it limits trade possibilities. So like, for example, if you want to take a trade with 20 points of risk, but like you literally can't, 20 points of risk, I mean, you'd have to have a pretty small account size, because even if you only had like 10 grand, you could trade one MES with 20 points of risk. But you know what I mean? Like if you literally couldn't take a trade setup because you didn't have enough money, then it would have an effect, but otherwise it should have no effect. And it's the same concept for the size of the trade. If you're entering a trade here, and this time you're using a 3-point stop, 3 points should equal 2% of your account. If the next trade you're getting in, it's a 10-point stop, 10 points should equal 2% of your account. So no matter what trade setup you're getting into or where your stop is, your amount of risk is always exactly the same.
All right. So account size isn't all that important.
Sanjay, I hear you doing something that I used to do, and that was trade with my account statement, not the setup. So trade with the setup with the mindset of I'm going to limit my risk by knowing where I will be wrong if this setup that I know has a high probability of working doesn't work.
Right.
Don't trade with your account setup statement. It's the worst thing you can do. I do it. I did it, and I still do it on occasion where I go back and look, and I was like, holy shit, I'm out like $1,000. And then, you know, you turn around and it's working, and you're up $500 and you feel better. But to me, it's trading with the account statement is one of the hardest things to get away from.
Yeah, I'm not sure if I'm doing that, because on AMP, when you do the paper trading or the live trading, it has a -4 and +8, take profit at +8 and take loss at -4. So it's almost automatic 1:2. And that's all I do.
Well, there you go. As long as you're focused on that setup, and
Yeah.
then it should take care of
It
itself.
hasn't been working out.
Yeah. I was about to say the problem with that is the market will never work perfectly like that. You're never going to be able to find a trade setup where every time it should automatically be 4 points or whatever. Some trade setups, you want to have a tight stop. You only want to risk a point. Some trade setups you have to give, like rotational, sometimes you have to give 15, 20 points. So you should be able to risk the same amount of money if it's a 1-point stop or a 15-point stop. And so you've got to be measuring that as you go along.
Okay, thanks.
Anyone else?
Any book ideas for next time?
Ooh, thank you for the reminder. I've got the link ready so that we can vote. I just picked the 4 options myself.
It's fine.
Let me post that in the comments.
I have to go back and read a couple more chapters over again because of what Scott was talking with the biases. I missed a couple of things, so I need to go back and look at that. Thank you, Scott.
Yeah, definitely. There's so much stuff. It's he jumps around, it almost feels like, and then he revisits stuff over halfway through one chapter. And I
Yeah.
did the audiobook, so I was like, whoa, I'm really trying to follow everything. But yeah, the biases are they're tricky, I think.
And he goes in the later books, he goes much more in depth into some of the concepts and a lot of other concepts too that have nothing to do with trading that are absolutely fascinating. Like he has a book called Anti-Fragile, and he basically invented this concept which exists in nature, but we didn't even have a word for it, that is anti-fragile. So like the opposite of fragile. What does fragile mean? It means as soon as something is tested, it breaks. Well, anti-fragile is like the more you test it, the stronger it becomes. And, like lifting weights, right? The more you lift, the more you tear your muscle fiber, but the more you tear your muscle fiber, the stronger it grows back. Like when you start to apply that to everything else in life, it will blow your fucking mind how much like basically make things harder for yourself and your life will be better. Anyway, he's an absolute genius. So yeah, I just posted the link for the forums there, and you guys can click on that. I'll just leave it up for like a day. Pick a vote for where you want the next month's book club to be, and I'll send out an email and let everyone know. Anything else? Any famous last words from anyone?
Great session.
Yeah, it was nice meeting you guys. I gotta go back to bed.
It was worth it for me.
Yeah, I think the psychology of trading is like almost a standard regular thing. We could almost, it's cathartic to do that.
Yeah, we really should. I should plan something like that for pirate traders, like where everybody can just get together and tell stories so that we all know we are all dealing with the same shit. It's exactly the same.
Yeah.
All right, guys. Thank you very much. And we will see you tomorrow morning.
Thank you.
Have a good night, guys.
Good night.
Bye.
Good night.
Thank you, Chris. By the way, you did a great job.
What's that?
Oh, sorry.
You talking to me?
No, I misspoke. I said Chris. I meant Scott. Thank you, Scott. You did a good job.
I'm like,
Yeah, no problem.
well, Charles, thanks, man. I appreciate it.
Yeah, no, you were great too, Chris. You were great.
All right, thanks, man. I'll see you guys in the morning.
All right, see ya.
No, I had everything on my work computer, and I had to use my wife's computer last minute. So that's why I was like, no slides.
Oh yeah. No, you did great. It was a perfect setup for the rest of the conversation. You opened the door.
Yeah, you know what? I realized without the slides, I was like, oh, that's why I was like looking at my phone. I head over here. I was like, I'm trying to look at the notes, scrolled in, and I was like, I was like, at the end of the day, there was just so much he's very intellectual with his like topics. So I was like, how deep do I go? Or do I just do titles, of headlines like denial? So
yeah, this one, I was thinking the same thing. I was quite relieved when you volunteered to do it because I was just like, fuck, like it's like a book report, like the last one was easy. Like Reminiscence of a Stock Operator. I prepped for that. It was like 10 bullet points. It was like boom, 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 boom. But this one, it would be like, dude, how do you even like, I was jotting down notes. I have 5 pages of notes.
Yeah, that's what I had on my phone. Cause as I was listening to audiobook, I'd be taking notes, and then I had like the slides. And then I was like, oh, no, I don't have the slides, but that's like my notes. And then I was like, technology fail again. But then I was like looking at my phone. I'm like, oh my God, there's so much. And like, it's so too hard to jump around. But like I was Googling words during it.
Oh, like when you were listening to it?
Yeah. I'm like, oh, what does that mean? I got to look that up.
Yeah.
So it was good. So I think these will be good. The more people come back, I think just the overall discussion, I think will be good for stream followers and to kind of build more interaction with the people just in Discord, So
yeah, I feel like that's what it'll end up being. It was a little slow at the start, but then people started to get more comfortable talking and like interacting and stuff. So yeah, I think
turn their cameras on. Yeah. But anyway, it's very good, and I look forward to the next book.
All right, bro. I'll see you next time.
Take it easy.
Cheers.
Bye.
Later.
Close this.
Recording stopped.